This episode of Untold Stories is sponsored by PowerSwap. You'll hear more about them later on in this episode.
What is up, everyone? I am Charlie Shrem, and you are listening and watching another awesome episode of Untold Stories, where twice a week together, we get to dive deep with some of crypto's Web3, technology, investing, research. We get to talk to leaders, we get to talk to brilliant people, we get to talk to some of the craziest, but also the most brilliant people in the whole entire world to really understand how this movement came to be, where we are now, and where we're going. But what's happening is there's so many of these trends, mega trends. We have coronavirus, we have inflation, we have oil and gas. There's this huge disconnect between the stock market and the economy. It doesn't make sense. We read that, there's all this crazy inflation, or like people are getting poor, poverty, but at the same time, we're being told that our economy is the strongest it's ever been. It's very confusing. There's so much discomfort. I don't really know what's going on. But today, to talk to us about actually what is going on, Brian Hunt, the CEO of InvestorPlace. Brian, thank you so much for coming on Untold Stories today.
Thanks for having me on. I'm super excited. I love talking with you, so looking forward to brainstorming.
You've given me this awesome opportunity to work for you over the last year and a half, and it's been one of the most fulfilling work that I've ever had. InvestorPlace is one of America's largest, longest-standing independent research financial firms, started over 40 years ago by business visionaries. InvestorPlace publishes detailed research and recommendations for self-directed investors, financial advisors, money managers, and we've launched the Crypto Investor Network together over a year ago. We have like tens of thousands of amazing members and readers who really love what we do. But really, you've been kind of steering the InvestorPlace ship for so long. You worked at Longfellow Drilling before, so you really understand kind of oil and natural gas. There's a lot of different topics that we can talk about today. And my crypto listeners really understand like consensus algorithms. They understand proof of work, proof of stake. We're in the rabbit world of like all these NFTs and things like that. I want to pull this out and talk to you about like kind of a big topic that you talk about a lot is proof of brain. And proof of brain is this idea that our skill, and this is your quote, I'm going to read it, skills and knowledge are the wellspring of that your wealth will flow from. And you really talk about that a lot, like us as individuals, and this term like self-directed investor. But I think your view is that we should all be self-directed in life, not just with investing.
Yeah. One of the hardest things to do is to think and make your own decisions, and that's why most people don't actually want to do that. They might say, I want to be in complete control of my life, but it's actually really hard. But if you turn your brain on, you take the red pill and you start learning about real knowledge. And then you can be in control of your own life.
There's so much discomfort now in the world because we're told things, we learn things, but then we see, and it's completely different. There was always this huge disconnect between financial literacy and proper money management. Do you think where we are right now is the most important time for people to really start paying attention to their futures?
Yeah, absolutely. I just did a company-wide, broadcast yesterday, where I shared what I believe is something of a terrifying financial forecast for the next 10 years for a lot of people, and it's something I've nicknamed the age of chaos. Some people say the 20s will be wonderful, the roaring 20s. Some people say they'll be terrible, the terrible 20s. My forecast is, I believe is the correct one. Of course, all of us forecasters believe we're right. But I believe the 20s are going to be among the most chaotic decade that we've ever seen in American history. And depending on your skill set and where your vantage point, that's either super exciting, it's going to be filled with opportunity, which it will. It'll be filled with extraordinary opportunity, or it's absolutely terrifying. And the reason I believe things will be so chaotic is because of two gigantic forces that we've never seen before. They're extraordinary, they're gigantic, and they're slamming into the world at the same time right now. One is exponential technological progress,
Yeah.
which is kind of like the wellspring of crypto and blockchain innovation, and also, the wellspring of self-driving cars, AI, renewable energy. And so most people don't understand how fast technology is changing, and how the speed of change is about to speed up. And the other thing that's slamming into the world, and these two forces are coming together in like this giant river confluence. The other one is this: we're in the middle of the greatest monetary experiment in the history of mankind.
I agree. Yeah.
Central banks are printing money like crazy. It really began in earnest post 2008, in response to the financial crisis. And of course, it's really kicked into high gear in response to COVID. But now people have got this taste of free money, like sent directly from the government. And I believe we've kind of crossed the Rubicon in terms of psychology of what people expect governments to do. Now, so many people believe you can't let anything bad happen, government. You can't let a recession happen. You can't let a bear market happen, because we're all, a bunch of
Yeah.
monkeys. And so you've got this extraordinary amount of money printing, slamming into the world at the same time as exponential progress, and they're feeding off of each other. So this stimulus, the low rates, that allows venture capitalists to fund innovators at when the cost of capital is as at the lowest we've ever seen. And so these things are just extraordinary, and they're happening right now, and most people don't understand them, but they will cause, I believe, the cycles of boom and bust to speed up, and they'll cause incredible bull markets, while at the same time bear markets. And so it's going to be really chaotic, but for me, I'm extraordinarily excited because I've trained my whole life for this. It's like the Super Bowl is about to start,
Yeah.
and I've trained. So, and to get back to your question is, I feel like that's why people have to really take control of their finances, their lives, and really make sure they're on the right side of these monumental forces.
How? Like it's such a complicated thing because I almost ask myself every day, what's the future of the dollar? I'm pricing everything in dollars. We have all of our assets. You can borrow against your assets, but you rely on this like the last fiat domino, as you call it, or whatever. That's kind of the scariest thing that I think about over the next 20 years. Where does the dollar fit into all of this? Because like you said, money is going to continue being printed. We're going to print probably another 75. We're going to double our money supply than it was a decade ago. It's just going to be double.
Yeah.
And the people at the top that have been printing at the behest of really like the folks at the bottom, and money is cheap. So folks who have a lot of assets can borrow against them at 1% and just get unlimited money. Money is cheap. Money is basically free now if you have it already. But if you don't, getting some of it, it's almost impossible.
Yeah. People complain about wealth inequality and the haves and the have-nots. And a big part of this is the central bank monetary policy.
Yeah.
Rich people know how to take advantage of all that cheap money. Poor people typically don't. And so it's fueling wealth inequality. As far as a dollar forecast, I'm not one of those people that thinks, that we're going to be pushing around wheelbarrows full of dollars.
No, me
and
neither.
bread. But I do think that we've entered a new era of debasement and inflation where, over the last 20 years, or for a 20-year period starting in around 2000s, we all got used to about 2% annual inflation. But a lot of us, it's easy to forget, in the 70s, the average inflation rate was about 7.5. Some years it was 10%, and it was absolute chaos. And in the 80s and 90s, we averaged around 3.5%, which it doesn't sound like a lot, but it's pretty significant. And so I think we could go back to that era of the 80s and 90s where we're seeing inflation at 3.5%, 4%.
Year over year.
Yeah.
Yeah.
And even at that rate, your cash is like a melting ice cube inside your bank account. So do you want to keep your cash in a melting ice cube that the government is shaving 4% a year off, or do you want to put it into productive assets?
In college, I learned like there's two different types of economies. You have consumption-based economies, and then you have ones where it's based on people constantly spending, the melting ice cube in your bank account. Then you have the opposite. Like I was learning about the Japanese economy at the time, which was like so hell bent on saving. In fact, the Japanese government couldn't get people to spend money. They need to like incentivize them because that economy was so based on saving. And now we know actually the perfect thing is the perfect of the two. And
Yeah.
growing up, I love the fact that at least I knew that this ice cube wasn't melting. And our textbooks would teach us, and our parents would tell us, and the media we'd read and we'd watch on TV. And we all watched Hollywood movies growing up. And we looked at money, saving. The dollar is not this melting ice cube, but it is now. Over the past 2 years, it's been this like melting ice cube.
Definitely.
So those where their futures are not like tied to that, at least like where if you own a piece of property and if the dollar goes away or if there's like crazy hyperinflation, the value of your property will always rise with that. What do you talk to the person who owns the HVAC business or the company where they don't have any assets. They just kind of earn income and they live and they spend and they try to save, but what they're saving doesn't really amount to anything.
Yeah, it's tough. My message to really anyone is, acquire the skills and habits that will allow you to earn money. And once you do that, don't be an idiot and blow it
Yeah.
on an expensive house. Don't be an idiot on blowing it on a car that you can't afford. Save it for future consumption, but don't keep too much of it in cash because the melting ice cube concept. Learn about the future and park your wealth in assets that can appreciate, that can rise in lockstep with the debased dollar. And that's stocks are kind of an inflation pass-through vehicle because if you own a good business like
True story, yeah.
Microsoft can raise its prices alongside inflation. So, and I'm not pounding the table on Microsoft or anything, but learn what assets will appreciate in this environment that I believe is completely driven by technological progress. So that would be my.
So what do you mean by that? I really want to get into this a little bit more because the listeners really need to understand, and I need to understand sometimes, what type of assets, like that's a perfect example. I never really thought about you own a piece of a company and that company can just raise prices.
Yeah.
So you're in good shape. What other type of assets do you think could be safe for the next, not safe, but for the next 10 years where it's like, at least the ice cube is not melting as fast as keeping money in the bank account?
Yeah, the old saying in money management business is diversification is the only free lunch on Wall Street. And I typically try to steer clear of Wall Street cliches because they're often harmful to the individual investor. But in this case, I do think diversifying is a really good idea because I like to think I'm a smart guy. I like to think I'm a good forecaster, but I don't know exactly what's going to happen, and nobody else does either. And so I think it makes sense to split your money up into maybe 4 or 5 tranches. One would be real estate. It could be your house. It could be an apartment building. And then one tranche could be wealth preservation vehicles like Bitcoin. And I'm also a little old-fashioned. I do own crypto, a lot of it, but I also own gold.
Sure.
And I do think gold will have another day in the sun. But and then another portion of your money can be in businesses. That could be private businesses. It could be just in the S&P 500. And then you could have a portfolio of maybe global macro bets or really high risk venture capital bets.
Yeah.
And so, but the message would be is that I don't think someone who should just go all in on one thing. I don't think someone should just go all in on, say, artificial intelligence stocks or all in on gold. Although some people do and do very well, I just think that's higher risk than most people are willing to should bear. But what is the it's in the Talmud, I believe. There was the asset allocation.
30-30-30 or something.
Yeah, it was like a third, so
I literally follow my life, our life, like financial world is very like that. And now that I'm thinking about, someone asked me where I got that 30-30-30 from or whatever. And I guess because I grew up like studying the Talmud so much, now in my head I see where that came from.
Yeah, you own some businesses, own some land,
Yeah,
own some cash, some hard money, like maybe digital hard money, but that diversified portfolio is a good idea. Now, I'll also say this kind of sounds like I'm backtracking on what I just said. Is that is for I think that advice is for relevant for a lot of people, but there's going to be some industries with just tremendous tailwinds that I believe their ascension is inevitable. It's preordained, like quantum computing.
yeah, for sure.
Just electric vehicles, self-driving vehicles, AI, and tokenization is just going to be absolutely massive. If you're young, you're 25, you're 30, you're 35, you don't have a lot of, obligations. I think some of these industries, if you're a specialist in it, maybe an entrepreneur or just a really knowledgeable investor, I think there's some of these things where you can put 50% of your portfolio, maybe 100%, maybe 200%. Go big, because let's face it, Jeff Bezos didn't get rich by diversifying.
It's
He
true.
made a big ass bet on online commerce. And
He saw like this mega trend though.
Yeah.
Jeff saw this mega trend, and I'm head deep in Bitcoin and crypto. I'm in the rabbit hole. The listeners are too. And I always thought that going back 10 years now, that Bitcoin and crypto were the mega trend. But I'm learning now that it's just part of this larger shift in society. Do you kind of see that too? Do you see crypto as just one mega trend amongst others? Like you said, that like there's a whole shift in how we do things. Are we in that pivotal moment? Like humans right now, is this that like watershed moment where we're going to be looking back now and people are saying, I missed the early 2000s before the internet even came along?
Yeah, I do believe the mother trend that gives life to battery technology, blockchain technology, AI is exponential progress. For decades, computing power advanced at relatively modest rates.
Yeah.
And our entire economy is built on a foundation of computing power. Smartphones, computers, space technology, communications. It's all based on computing power. And now this critical ingredient of our economy, because of Moore's law, like the progress of computing power is now really snowballing on itself, and quantum computing could just turbocharge that. So it's all snowballing in power and speed. Our computers are getting so much faster, so much more powerful, while at the same time getting cheaper and smaller.
Yeah.
It's incredible. And so that's giving life to all of these mind-blowing new technologies, and it's creating incredible wealth. I believe this is the beating heart of why the FANG stocks are worth trillions. It's why Bill Gates and Elon Musk are the world's richest people. And so, exponential progress is at the heart of all these things, and it's giving life to blockchain and artificial intelligence and space technology. And it's just causing mind-blowing advances all over the place. And the rate of change is only going to speed up. And the crazy thing is, I see this as clear as day. It dominates my thinking. And whenever I talk to institutional investors about this, or professional stock analysts, they look at me like a dog that I showed a card trick to.
Yeah, that's what I don't get. They think that everything is just kind of slow, it's growth, it's continuing to do this thing. But you've been teaching people financial research I don't want to show your age or anything, but for a long time, you've been teaching people pre-retail influx, pre-Robinhood.
Yeah.
I mean, this term self-directed investor, it's another one of those things where you have to have literacy for yourself, because again, like the financial managers of the world, the hedge funds of the world, the mutual funds, the VCs, the private equity, the guy who's the fund manager on the street corner of Main Street where you live, they want to manage your money. They want to manage your money. They want to put it into a 6-7%, take 2% and give you 4%.
Mhm.
But really, you've been doing this with self-directed investors for years. It comes down to financial literacy. It comes down to money management. What scares me, and I'd like if you can give some advice to these people, is I know a lot of people now who have been downloading apps and been buying into random stocks that they hear from their personal trainer or their friends and things like that. Why is that wrong? Like, why shouldn't Why shouldn't we be like just going into like mega tech cap stocks and kind of going crazy?
Yeah, well, my first piece of advice for someone who's maybe considering getting into the market and being a self-directed investor is don't do what I did.
What'd you
And
do?
I paid a very expensive tuition. I started trading stocks in the late 90s during the internet boom. And the worst thing in the world happened to me in the first year. I made a fortune doing it. I had immediate, huge success. And I thought to myself, oh, just a couple more years of this and I'll be 25 years old and I'll be
Yeah.
retired in Bali, and hubris, I confused brains with the bull market. And I bought one of the leading stocks of the day was JDS Uniphase. You might remember that name. It's a legendary tech winner of the late 90s. And I made 400% on it in less than a year. But the negative thing in my mind was I had only put $800 into that one, but it went up 400%. So
Yeah.
that's a 5x win. And I thought, why fart around with small position sizes? And I found this new stock that I really liked, and like why mess around with the
Oh,
small
so you got
position size?
excited.
So I went almost all in on one stock. And at the time, I didn't know anything about position sizing, sizing your positions intelligently. I didn't know anything about stop losses, risk limiting. I made almost every mistake in the book on that one stock. I went way too big. I didn't know spit really about the company that I was buying.
Yeah.
And also the Federal Reserve was starting to raise rates at the time, and we're kind of taking away the punch bowl. So on that one trade, I was investing in something I didn't really know about. I went way too big, and all I thought about was the upside. I didn't think for a second about what the potential downside is. So, yeah, that's yours. And so I think that, and it was, and I lost a ton of money. The stock lost 50%.
Really?
And I lost more
Oh
money.
no.
I lost more money that year than I made in my job. And it was humiliating, and just my friends knew that happened to me, and it was very painful and very humiliating. And so I think some of the lessons learned, in the old "don't do what I did" is, if you're new to investing and you maybe got $10,000 and you don't really know what's going on, don't put all that $10,000 at work all at once. Maybe take $2,000 and learn the emotions associated with investing in crypto or stocks, because it really will play with your mind. And I think that's a way for people to kind of have training wheels. Just learn the craft, learn what's going on, but just don't do it with all of your money. That's just crazy.
You mentioned bet sizing, and I actually read a quote this morning that said that the hidden talent in crypto, the best traders are the ones who know how to properly do this thing like bet sizing or
Yeah.
knowing what I had never heard of that before. What does that mean?
Yeah. So probably the most influential financial book of my life is a book called Market Wizards, and it came out in the late 80s. And it's not really a conventional book. It's just a collection of interviews with the greatest traders and investors at the time. People like Paul Tudor Jones.
Did they update that book? I wonder if there's a modern.
Yeah. There's been 5 or 6 new versions of it over the years. It was so popular and so influential. And so the author Jack Schwager interviewed probably over a dozen traders and investors from all walks of life, using all kinds of different strategies. There were stock investors, there were commodities traders, there were currency traders, and there were momentum stock traders. It ran the gamut. And the thing that blew me away is almost all of them said, it doesn't really what I know about my strategy. Like, I might know a lot about the oil market, or I might know a lot about the Forex market, but really the driver of my success is risk limiting, money management, and position sizing. They all said the same thing. And well, what is risk limiting? What's position sizing? Position sizing is very simply, it's the amount of money that you put into one position relative to your overall portfolio. So if you have $100,000 to invest and you put $10,000 into an investment, your position size relative to your overall portfolio is 10%. And the huge mistake that I made, back in the day where I paid my tuition was I put almost 75% of my money into one stock, which is really, really stupid. And so a lot of professional traders will, the max that they'll put into one position is 5%. And so, there's an expression, keep your bets small in order to win big. And, you know, the key behind position sizing is you never want to go so big that you can suffer a catastrophic loss
Yeah.
and get knocked out of the game. And it really causes psychological trauma
Yeah,
to
it's
bet
when
that
you
big.
when you do like too big of an investment, you get too emotional about it too.
Yeah.
I know exactly the certain type of investment number in my head, like if there's a new business or a token or a company or a stock that I want to get involved with over like a long term, I kind of have like a number in my head that I'm comfortable with, that if it's a win, I'll win big, but if it's a loss, then it's okay. Like that's not the end of the world or whatever. And there's a lot of other like, I think also like working with your accountant and understanding like how taxes work and then how your tax system works. And then you can affect your saving and your spending based on that. And then also there's a lot of different like things that you can do to protect your future.
Yeah. And in the industries and the assets you and I are passionate about is really important. The position sizing is really important because we're talking about assets that a lot of investments that I make, I know they could go to zero. They're speculative, but the potential upside is 10x, 20x,
Yeah.
50x. So you got these enormous asymmetric risk reward profiles where sure you can lose 100% of your money and people, oh, like that sounds like crazy risky. Well, yeah, but the potential upside is like 20x.
Yeah.
And so taking what I call a venture capitalist mindset is really, really important when it comes to bet sizing in things like crypto and early stage technology stocks and private investments, where the world's best venture capitalists, they might buy 100 different companies
Yeah.
and they know that over half of them are going to zero.
Sorry to interrupt your regularly scheduled programming, but I wanted to tell you guys that if you're using PancakeSwap, Uniswap, DYDX, SushiSwap, you're doing it wrong. You need to be using ParaSwap because ParaSwap is a user interface, a decentralized smart contract platform that sits on top of all of these. And when you go to ParaSwap or untoldstories.link/ParaSwap, because they're refunding your gas, if you go there, then you'll be able to, on top of Ethereum, Binance Smart Chain, and Polygon, look for the best prices for your tokens and swap and do everything in one predefined transaction on chain. Instead of having to do the approval to this token, to that token, to do all these different things, ParaSwap does it all for you. It's decentralized. They just released their API version 5 that you can see everything. It's all open source. Very cool stuff. Untoldstories.link/ParaSwap. If you're using any of the other decentralized protocols, you're doing it wrong because you need to be using the routing, beautiful ParaSwap routing system, and it's fully decentralized too. It's gorgeous. I'll talk to you guys soon.
I never understood that's actually how venture capitalists work. I thought that they have this bucket of money and you show up and you pitch your company and they invest if they like you. But it's actually like they have a fund and then they know that they're going to be investing, like let's just say it's a $2 million fund, $100,000 a business. So you have 20 businesses. They know that only like 3 or 4 need to like really, really hit it big.
Yeah.
It's kind of crazy. And so like a lot of research services will put out a research report. They'll have one, recommendation or one different trend. I've noticed that with the Crypto Investor Network that we've been doing together, but with also the other type of research that you guys do, oil and commodities and gold and silver and stocks and all these different, the power portfolios, all these different things. We're always doing like 4 or 5 at a time. Whenever we put a research report out, we're always doing 4 or 5 at a time. We never just put out just one. And I like that. I really like that.
Yeah, I think that's a key to making to having the right risk reward profile when it comes to investing in a big trend. And I often call these trends inevitables. Blockchain, inevitable. Electric vehicles, inevitable. Quantum computing, inevitable. DNA sequencing, inevitable.
Oh yeah, I forgot about that too.
And so a lot of people they hear about one industry, from a guy at work or their brother. Oh, like quantum computing is going to be really big, or DNA sequencing and the treatments that bloom out of that is going to be
Ah,
really big. And so they think, okay, well, I'll buy one stock to bet on this inevitable trend, or and when it comes to early stage investing in these giant trends, buying one stock is crazy risky. I think it's far smarter in the early days of these things to find four, five, six,
yeah.
seven, eight companies, spread the risk. But at the same time, you're not buying an ETF, which could have 100 companies, and 50 of them are crappy, 80 of them are crappy, and some of them don't even really aren't pure
Didn't
plays
do
on the trend
anything.
anyway.
Yeah.
So I feel like this basket approach that that we've really been the leaders on, I think, in our industry, and really emphasizing that this basket approach where you're buying three, four, five, six, eight companies to diversify your risk, but you're not diversifying it so much that you're super diluted. So I think that's a smart way to play these mega trends that we call inevitable.
You've uh uh you've talked to me a lot about price discovery, and we've talked a lot about tokenization. Do you think that do you think like every asset will and should be tokenized, and that's kind of how crypto uh, made its huge effect on the economy? We'll have better price discovery. We'll have better being able to trade off assets. You'll be able to create tokens that represent like 25% of each different industry together, like baskets where tokens represent multiple different things. Is that kind of where we're going?
Yeah, I think this is one of the most
It's
mind-blowing
so cool.
things in
Yeah.
all of technology and all of crypto. And our informal nickname for this is the Own Anything Revolution. Because when I explain tokenization to non-investors, non-technologists, it can be hard to wrap your head around,
Yeah.
because they're like, what do you mean I can own anything? Well, blockchain technology is going to make it so you can own anything. Really? What do you mean? A sports team,
Yeah.
someone's earnings power, real estate, a Picasso, a Rolls Royce, fine wine, Damien Hirst, art. We'll be able to tokenize everything and chop the fractional ownership slices of anything. And this is one of the biggest financial revolutions in human history. We also kind of say it's like capitalism, or it's ownership 2.0, where 1,000 years ago,
Oh, this is
capitalism
interesting.
capitalism didn't really exist. The guy in the castle owned everything, and most people are a serf. You don't own
Yeah.
anything, and if you try to get uppity and own something, well, we'll just cut your head off. Well, okay, the formation of America really gave life to this idea that you can own the fruits of your labors, and people, millions of people from all over the world flock to America because, oh, I can own things, I can own the fruits of my labor. That sounds awesome. And bang, it's the greatest wealth creation experiment in mankind. But there were a lot of assets for hundreds of years that a lot of people couldn't own. We did chop up ownership in companies, fractional ownership, and but as far as a Picasso or a premier condo in New York,
Yeah.
or a port,
An NFL team or something like
NFL
that.
team.
Yeah. A port is a great example of one,
Yeah,
actually.
yeah. Most of these things they're so expensive that a single one is priced out of the reach of the regular Joe, and so blockchain technology allowing us to create fractional ownership of basically anything. Like you can own anything,
Yeah.
and that is fucking mind blowing. It is going to be so cool. And you and I have talked about all of the opportunities here. It's like the opportunities in the companies that are building this world, and then you've got the opportunities of actually owning these assets that have been made available. It's just going to be so cool.
We're sitting here in Baltimore, Maryland. I'm bullish on Baltimore. I love that you live here. The office is here, and everyone who lives here. My wife is from the area, and so I've been coming here a lot for a long time. And I look at this city, and I'm like, this is one of the oldest cities in America. It's beautiful, some of the best people, but there's just been a lot of corruption and graft with the local government over the last like decade.
Yeah.
And there's a revolving door of like violent crime problems because you have the justice system is very lax and there's distrust with institutions. We look at tokenization, potential smart cities, people owning a piece of the city. You're talking about like the reinvention of municipal bonds again. Like people get
Yeah.
excited about muni bonds because
Yeah.
they will be tokenized. People can invest in like the future of Baltimore.
Yeah.
I said it like the Baltimore, Baltimore.
Yeah. Betting on cities, betting on countries. Like
It's cool.
could someday we tokenize a country?
It's going to happen. It's happening right now. I was actually getting to that. Like that's the craziest world, because at that point, imagine being born. Imagine everyone who's born in a country, automatically you're born with a token.
Yeah. You get a piece, real free market libertarians have had this fantasy for 50 years that, oh, we could privatize a country and make it shares freely tradable. Hey, blockchain, it's here. Hopefully somebody does it.
You're talking about not just so like you go out there and you can form, like, instead of doing like an ICO, the city can say, hey, we want to build a new parking garage, or we want to reinvigorate a downtown area. And so people can invest in that token, they can buy a piece of it, and then you're starting to own a piece of like your city slowly. And then what could happen is certain aspects, this token, these NFTs that are individual, can start unlocking different keys, or you can have different aspects of the city too. You can start voting with that token for different people. You can start like trusting those institutions again, because the regulators will be regulated. Like the justice system could actually be on chain. Judges could be on the blockchain. I mean, the sky's the limit. So do you think we should be looking at maybe like these kind of cities like Baltimore and some of these others? A lot of people are moving away. They're looking for like, brighter skies or whatever. But I always look at opportunities. So like, is this an opportunity that I should be looking at?
I think a city's leaders that think in the future and say, we want to be a place that attracts capital, that attracts entrepreneurs. We respect business. We respect property rights. And we're going to tokenize ourselves, and we're going to be a destination for capital.
Yeah.
The cities that do that, it's going to be so cool. The only I think where investors will have to be very leery is you've got to make sure that you've got leaders that do respect that kind of vision, or are they terribly corrupt, and do they think state power is the answer to everything? So you want to avoid the totalitarian communists and invest with the free market, free mind capitalist thinkers.
What makes a good leader?
Oh, I think it's somebody that you respect. It's somebody that I can't remember where I heard this, but I was not in the military. My dad was in the military, but for some reason
Oh, so you get some of that threads. I never knew that. I was actually going to ask you.
Yeah, you find a lot of military analogies in my stuff, in my speeches, but I kind of boil it down to, if you can picture a helicopter, soldiers in a helicopter landing, the leader is the first one off of the helicopter, and he's the last one on. And I think that kind of mentality, that respect, that I'm gonna be out there, and I'm gonna be among taking the biggest risks. I'm going to put myself in harm's way for my people, and I'm gonna be the last person that gets on. And I think that kind of, you got to have, of course, like a visionary like Elon Musk. That's awesome, and a leader. And but I think if you don't have that character of I'm here, like I kind of serve my team. I think if it's a president, a U.S. president, like you got to think that I'm here to serve the citizens. Or if you're a CEO, like I'm here to serve customers and the employees and the shareholders. I think that kind of character is that's
There's a lot of humility involved there, though, and humility is a superpower. You have it. I was given some of it by some of the actions and the things that have happened to me in my life, but largely, unless you go through like a trauma, or you're in the military, or you have some like really bad upbringing or things like that, you don't have humility. It's a superpower that we all wish we had more of. And what advice would you give to people? How can we get more humility? Like, I want to wake up and I want to be more humble every single day, because when you can think outside of yourself, you could just be more successful. You be a better person. You could love, be loved. It's all these different things.
Yeah.
It's hard.
It's a this is a paradox in my mind, because I'm a capitalist and I believe in free markets and I believe in, you know, living your life to the fullest. Yeah, and I think communism is about the worst idea humans have ever come up with. But also in my mind, living to provide value to others is that's how you're gonna be happy. You know, it's not just like Scrooge McDuck,
Yeah.
just trying to grab everything for yourself. Like, you're just gonna be miserable. And so I actually it kind of sounds like a paradox, but I think living for others and doing good things for others is kind of the way to achieve personal happiness. So
The roots of communism, it's funny that you bring it up, because a lot of like early communists and people, I actually Googled yesterday, who still likes communism. I did Google that. I was
a lot
one.
of people.
Apparently so. The rooting of it is based in that, like, you're living for other people. And I have to say, and I challenge a lot of people to do this. Go out and just give or do things for other people without any expectation of getting anything back.
Yeah.
There's a Jewish term for it called chesed, actually. It's where you don't expect anything in return. And I challenge people to go do that, because this is another superpower. You get more positive out of life when you're giving than when you're getting.
Yeah.
And it's not because you'll get back something. It's not the karma. It's not the I scratch your back, you scratch mine. It's not that. It's the actual act of giving. Is you feel better in that moment. It's a better thing than getting. I find I get more joy out of giving than I do out of getting.
Yeah. Yeah. And there's a lot of people out there that they don't get this yet, but maybe they'll hear something like this and say, wow, that sounds really cool. I've been a self-centered
Yeah.
a-hole for so long. Like, how can
I
I
was too
change?
for a long time.
And I think that it's almost like exercising. You need to exercise it a little bit. You exercise it a little bit, you'll get even better and stronger. So if someone out there is a self-centered a-hole
Ah.
and like, hey, just spend 1 minute tomorrow doing something nice for somebody, and then do that 1 minute every day, and then next week maybe do it for 1 minute and 10 seconds. Maybe just it's kind of like if
That's
you're
good advice for everything, really. Even
yeah,
financial literacy.
yeah, like if you're trying to get into a workout program, and doing 100 push-ups sounds just too much, just do one push-up tomorrow, and do one push-up per day for a week, and then maybe next month do 2 push-ups. Just work up to it. James Altucher, a friend of mine, he put it as if you're having trouble getting into the habit of brushing your teeth, just brush one tooth.
That's great.
I always thought
That's
that. I was
great.
like, what a great idea.
That's the best advice I've ever heard,
Yeah.
actually. So it's like, but let's apply that to everything. Let's apply that to like anything that you want to learn. Like, if you want to figure out how to solve a Rubik's Cube, if you want to be someone that, you want to be an aficionado in marine biology or whatever, just spend 1 minute a day, and then start
Yeah.
spending 1.5 minutes a day, and slowly build it up.
Yeah, yeah, absolutely. And with things like that, where you say, yeah, I'm going to be really knowledgeable about marine biology or blockchain or tokenization, you can build up to that. And if you can spend 1 hour a day on something like that, whether it's work or it's a personal, like it's a hobby, but I've always applied it to work. I've always told someone, if you want to get ahead here or anywhere, get in 1 hour earlier than everybody else and spend that hour,
Oh, I like that.
learning or writing. If you want to be a great writer, get in early and spend 1 hour. And if you can do that over the course of a year, that's a huge amount of time that you can spend on that. So,
Brian Hunt, CEO of InvestorPlace, thank you so much for taking the time and coming on Untold Stories. You've given us a lot of untold stories, advice, proof of brain, different concepts, and things like that. I'm excited for the future. I've been nervous about the future because I don't like discomfort. I don't like that like when we all find ourselves in a box. We like our box. We don't want to think what could happen if you have to start being outside of the box. But kind of every day I talk to you, I feel a little bit more and more comfortable with the future. And you're right, I should be looking at it, and we should all be looking at it as this like huge world of opportunity over the next 10 or 12, 20 years.
Yeah, well, thank you. This has been great. Let's do it again soon, and please keep what you're doing. Keep up what you're doing, sending out the great ideas and the great vibes.
And I want to let everyone know too that we have the Crypto Investor Network as well, and we have so many subscribers and readers that love it too. If you're also interested in other types of research too, like stocks and commodities and precious metals and things like that, InvestorPlace has been around for 40 years doing teaching people how to think for themselves. And so being able to do that for crypto over the last year and a half has been the most fulfilling work I've ever had. So thank you, and thank you to the readers and the listeners and everyone who's here right now.
Yeah, thank you.